Okay, hello everyone. Let's take a moment, look at the disclaimer. This content for educational, information, entertainment purposes only, and nothing should be taken as a recommendation to buy, sell, or hold any securities at any time. We are here just to spread the word about how BTA analyzes the markets, how we look at the markets. Okay, my name is Rod, and we are known as the middle bottom, and we're not going to get out at the exact top, but we will. I said we will make a lot of money in the middle. We are the stock market masters. And sometimes it seems as though we can see the future. Okay, we're going to pick it up here with the Qs. We did the first part of this. We looked at the DIA and we looked at the Standard & Poor's 500. And as we talked about where we went in the market, okay, and what was the pivot for us on those, in those markets. Okay. It was slightly different. We did not trade the Qs, okay, on Friday. We had our file due day on Thursday. We talked about that in the first video. Okay, go back and look at the first video. We talked about the file due day, when it happened and how it happened. And we went in the DIA and the SPY on Friday. We took positions in the DIA and the SPY. We took long positions. Okay, but the Qs we did not. I'm going to tell you why now. We had a similar pattern as the Dow Jones and the SPY. And this is the pivot point right here. Okay, but the Qs took a little bit longer during the day before it actually broke above this here resistance level right across the high of this double bottom, somewhat of a double bottom pattern. The Qs took a little longer in the day. It didn't start breaking above this until later on, toward the afternoon, before it broke above this resistance level, which would have been our pivot. And we wanted to wait until we see how the market closed, because we wasn't sure if it was going to start pulling back, because sometime before a holiday weekend, traders like to start selling off the position toward the end of the day, because they want to close out their position. They don't want to hold it over the weekend. And sometimes they don't like to hold positions, especially on long weekends, long holiday weekends. They rather sell, take their profits on Friday, and maybe get back in the markets when the weekend is over. So we are aware of that, and we wasn't sure if that was going to take place. So we decided to kind of wait, because the Qs did not break above that pivot point early in the morning. Okay, right when the market opened, like the Dow Jones and the Standard & Poor's did. Okay, so that's the reason we waited. And then toward the end of the day, we decided we'd just wait, because now we're coming upon this downward trending trend line here. So basically, we're above the 21-day moving average. We're above the pivot point, and now we close just a little bit above this downward trending trend line, this downward trending trend line across the highs. So that's good. So the Qs may be ready to trade, okay, take a position in the Qs come Tuesday. We might be in the Qs, take a position in the Qs on Tuesday, okay, because it did close above this horizontal resistance area here. This is the pivot point of the double bottom. We're above the 21-day moving average, and we just closed above this trend line. So now we want to see this price get above here, come back and find support at this prior resistance and at this trend line. Bounce off of that and try to head its way back up. That is where we're looking at. That's what we're looking for. So that's what we'll be trading come next week on. We'll be trading this chart that Tuesday will be the entry, if not maybe Wednesday. But this is what we're looking for. And if you notice, Lois has now given us the signal that we have started a new upswing in the Qs. We're going up in the Qs. Okay, the market is going up. All right, we told you weeks ago that this market was looking like it wanted to bottom. Forget about what these people are saying on the news. They're lying to you. The charts, our indicators work. What we've been taught work. What we're trying to show you works. Okay? It's been working for 100 years. It's not going to stop now. We learned from the old timers. Okay? Our stuff works. Lowest is what we created now, which is new, but it's based off of the old. Look at Lois. She never fails. When she turns blue, look at it going up. When she turns red above prices, look at the prices going down. Look at it. Look at the changes in Lois. She never fails us. Every now and then, we may have to close out a position, but for the most part, if you follow her, she will lead you to success. But the blue line is there now, below prices. We broke above the pivot point. We're getting above this downward trend and trend line. We're above the 21-day moving average. We got a bullish crossover on the MACD, and the histogram is expanding. Not bad at all. We're going to be looking to take a position in the Qs next week if this continues to play out. So the Qs, the QQQ, is on the action list for next week. We're looking to get in as soon as possible. Now, this is a daily chart of the moving averages. It looks beautiful, okay? It looks beautiful for right now with the start of this new upswing. You see the 5-day moving average, which is the white moving average line. It has broken above the 9, which is the green. That is our bronze crossover. Look how price is above it, and price just broke above the 21-day bars than we saw on the DIA and the SPY. At least this Friday volume picked up. It was a little higher than Thursday and Wednesday, okay? But we're seeing the moving averages turning up now. We got above the 21-day. If we can make it back up to the 50-day moving average, which is this red moving average line, okay, that's right around 328.52, okay? That's right around 328.52. If we can get back above that, that's going to be great. But that is going to be our first area of interest, 328.52. That's going to be an area of interest for us. We have to watch it. It could run up to that 50-day moving average and get rejected. Move from here. So we're going to get our position in the Qs as everything works well come early next week. Okay. And we're hoping that, okay, it can go back up to at least the 50-day moving average before it starts to stall. Okay. Not to say it's going to get rejected, but that is probably going to be the first area where we'll start seeing some interest that we need to be concerned about, an area of interest where the market it's a possibility that it can start stalling there, may not get rejected, and may move sideways and then find its way back upward. But that is the next area of interest, the 50-day moving average. Okay, now, okay, on the on balance volume. Okay. For some reason, the DIA is coming up here. I apologize. Okay. Here's the Qs. I don't have the chart of the on balance volume right now. I'm sorry about that. But the volume on the on balance volume, it is breaking above the highs. As the price is breaking above its high, the on balance volume line is also breaking above its high. So it's telling us that the volume is definitely coming in. I apologize, I didn't have that chart ready available, but it's definitely coming in. The on balance volume is showing us that the volume is coming in. They cannot hide from us. The institutional investors, we see you. So now, this is the white line. This is a 4-week moving average. Okay. The white line, the 4-week moving average. The green line is an 8-week moving average. Okay. Here is the 100-week right here. So we have to be very careful. We need to get back above this 100-week moving average. Okay. That is critical. All right. So we got above the 4-week. We're coming up upon the 8-week. But what we need to see is we got to get above the 13, and then we got to get above that 100-week moving average here. We got a downward trending yellow moving average line, which is a 13-week moving average line. Okay. But this 100-week moving average, it can act as some resistance. So we got to see if these areas right now is going to start. This is our area of interest. Is this going to start giving us some resistance where prices may go up to that and start breaking back down? Okay. So we're coming up next week. It's going to be a critical week. This is going to be the week where we're going to start seeing a lot, and it's going to tell us a lot about this bounce. Is this going to be a really good tradable rally, or is this thing going to move up and just get rejected? All right. So we're coming upon some areas that of interest that could be some real resistance. We got to keep our eye on it. We got to watch it very carefully. But this is the levels that we have to be careful about. This are the areas that we know it can act as resistance. Because it is breaking out. You see that on the daily chart. Now, this is the IWM. We did take a position in IWM on Friday, right at the open. And you can see why. All right. It's not hard to see. Here we have a double bottom. It would have been better if the second bottom would have got below the first bottom. So we like our double bottoms to look something like this, where the second bottom is below the first bottom. That's the shakeout. Well, nothing's imperfect in life. Okay. None of us are, and neither are the charts. So you have to take that into account. This is an art. This is an art, not a science. But so we're going to take this as a double bottom. All right. And here was the pivot, the high of the middle of the pattern. Okay. The midpoint of the pattern. So on Thursday, price broke above it, and then it pulled back and it closed below this high, but it stayed above the 21-day moving average, which is right here. But on Friday, right at the open, we broke above this pivot point. That's where we went in. That was our pivot right there, around 182. Okay. That's where we went in at. All right. And it wasn't hard to take that trade. Look at Lois. Lois got below price for 2 days before that. So for 2 days before that, Lois had already told us that's a possibility that the upswing was beginning. So look before when Lois got above it, we hit this area here, this area of resistance. Okay, this is the prior support, which then turned into resistance. And we got rejected at that downward trend in 21-day moving average. And right when you got rejected, Lois turned red again, telling you that the swing had just turned down. Okay, so now Lois turned to an upswing again. And now we use these levels, okay, this horizontal line as the resistance. Can we get back above it? And can into an upswing? The blue line got below prices. We did break it. We did have a bullish crossover here. If you notice, when Lois gave us a signal here of an uptrend, the histogram on the MACD was still negative, and we did not get a bullish crossover on the MACD. So we don't need that to happen to follow Lois. We follow her all the time. But when you start getting these other confirmations along with it, like bullish crossovers, histogram now turning green and expanding, when you start getting all of that with it, that gives you even more confirmation. Now we ready to rock, baby. That's what I'm saying. So I'm hoping that IWM will go. Let's go. So here we got this downward trend and uptrend, this downward trend and trend line across the highs. That's our next area of interest. Okay. We got to watch that on the IWM. That's our next area of interest. So now let's look at the moving averages for the IWM. Well, we got that white line, which is our 5-day, the green line, which is our 9-day, and the yellow, which is our 21. Well, look, right here, the 5 is crossing above the 9. That's our bronze crossover. And the 9 is getting toward the 21. That'll be our silver cross. Well, that's what we need to see happen come early next week. And then here's that downtrending 50-day moving average. That doggone 50-day moving average, downtrending 50-day moving average, has been a headache. And it does look like it wants to be our area of interest, just like on the DIA, the SPY, okay, and the Qs. That downward trending 50-day moving average is our area of interest. Right now on the IWM, it's at 192.24. Okay, so we got to see if we can get above that. We could trade right up to that and get a rejection. 50-day moving average, if we're fortunate enough to get there, we have to see, are we going to get through that? Is it going to hit it and get rejected, or is it going to consolidate a little bit and then go? But this is our area of interest on the IWM. That 50-day moving average is what we have to watch, okay? Is our area of interest on the moving average. Now, I did have the IWM on balance volume. I apologize once again. I didn't have it set up for the Qs, but the IWM, the DIA, the SPY, all of the major ETFs, okay, is showing us the same thing. The on balance volume, this green line is the line of closing prices. Here is the high on the line of closing prices. We got a vertical line going across the highs. And look at the on balance volume. Here is the high. And notice we had several areas of resistance right there at that high, at that level. It was support back here. Support, 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 support. Then it turned into resistance, okay? So this is key on the on balance volume. Here, going right across the highs of the accumulation distribution line and right across the highs of the price volume trend. But notice we broke above the high on the the line of closing prices. We got above that. Look at the on balance volume, broke above its high at the same time. Accumulation distribution line broke above its high at the same time. And look at the price volume trend that comes in a little slower all the time. It is now getting above its high. So, institutional investor, know that we are watching and we see you when you are accumulating. You cannot hide from us. Our indicators work. They cannot fail and they will not fail. We see you. This was not hard to see because our indicators, we're looking at volume in all different areas. We're looking at the volume bars, on balance volume, and 3 different calculations of volume on the line chart with the on balance volume. The on balance volume line. And then the price volume trend line calculates volume differently from all the rest of them. So we're looking at 3 and 4 different calculations of volume. So how can you hide? You cannot. We see it all. Our indicators work. We crushed it Friday. We crushed it Friday. And we have been telling you leading up to Friday, Thursday, and Friday for the last 2 weeks, the market was bottoming. We told you. Now, here's the IWM on the weekly chart. Longer term weekly moving averages, that 100-week and that 200-week. We came down to the IWM and we started finding some support right around that 200-week moving average. Well, we got above the white line, which is the 4-week, and we closed almost to the penny. We saw that on the other major ETFs, okay? Almost to the penny of the 8-week moving average. And here is the yellow 13-week moving average. So can we get above this now? Can we get above this? Can we get above this? Now we have to be careful, because if we do get above these levels, then right overhead is our 100-week moving average, and then we got a downward trending 30-week exponential moving average. This area here is an area of interest for real. Okay, we have to keep an eye on that, and we got to see if we can get above that. It's a possibility we could come into this and start finding some sideways action, maybe some rejection. I don't know. That's what I'm saying. We had a good move last week. We'll see if we could get some follow through. But it's a possibility we could run right into this downward trend in 30-week and run right into this overhead resistance of the 100-week moving average on this weekly chart. So the IWM is coming into some major key overhead resistance. We got to see if we can get above that. That's areas of interest we got to keep an eye on. Now, here's the ITOT. You know we went in that ITOT. You know we took that trade. You know we took that trade. Okay? Here's that double bottom. Look at Lois. She said, go. Let's go. Lois said, let's go. Okay? She turned blue. The price is in the upswing. Here's the pivot point right here, the middle of the pattern of the double bottom. We broke through that very early on Friday morning. We took that trade. We got long right there. That 21-day moving average is trending up. And then we got above this overhead, these fractals. But this red is a weekly level. That's a stronger, longer term weekly level. We got above that. So the ITOT did very well, very strong. Look at that bullish crossover. Look at the histogram expanding on the MACD below. Look, we had to take that trade. So you can see we long the market. We long. We long the market. DIA, the SPY, the ITOT, the IWM. We long the market. We long. Okay. Go back and look at the video we did about why we took the trade in Microsoft instead of Apple. Okay. We long Apple. We long. All right. We're not scared. We're using proper money management. We getting in at the pivot. Look, what we do works. It's been working, like I said, for 100 years. They're going to stop working now. We talk about it every week, twice a week. We have our meetings twice a week on the BTA website. Brown trading, all the different indicators we use. This is just a few. This is just the basic ones. Okay. Now here's the ITOT. Okay. Daily chart with our moving averages. You know we took. Excuse me. You know we took this trade. Okay. Look at this moving averages. The 5 broke above the 9. Okay. Ran right up to the 21-day moving average. The 5-day moving average broke above the 9-day moving average. The white line broke above the green. We got a bronze crossover. Prices jumped above both of them. Ran right up to the 21-day moving average. Okay. Got above that. Look at that volume. For the first time, the ITOT, the Standard & Poor's Total Market, this is the first index that we saw that average. Hello. You know, when we saw that, we said, oh, it's time to go. I looked over at my daughter, my son, and everybody else here at BTA and said, let's go. Okay, we're in. Let's get that money. All right. So here we got a downward trending 50-day moving average. It's right at 95.06. That is the next area of interest on this daily chart of moving average that we'll be looking at. 95.06. Can we get above that downward trending 50-day moving average? Well, we're going to see. Okay. Now, here's the daily chart of our on balance volume. Up top again, once again, we got a line chart of closing prices. Here's the high on the ITOT. Here's the vertical line going across the highs. A high point of the on balance volume, the high point of the accumulation distribution, and the high point of the price volume trend. Okay. Look, as the ITOT broke above its high, look at that on balance volume. Look at that accumulation distribution line. Look at that slower price volume trend, how it came in and broke above all of that. Okay. They cannot hide. I don't know how many times I have to say that. We see everything moving. We watching everything moving, from the economic data to the price to the technical charts to the fundamentals. We watch it all on BTA. We talk about it all twice a week, 1 hour twice a week. Okay, we talk about it all. Write notes every morning, talking about it all. We watching it all. We see everything moving. My mentor told me when I first got started, he said, Rod, you got to watch everything moving. Okay. So the institutional investor can't hide from us. We're looking at volume in all different areas. We're looking at volume and momentum from all different angles. They cannot hide. Okay. So the on balance volume, accumulation distribution line, price volume trend now confirm everything we've seen on the volume bars. For the first time, the ITOT was the first ETF average accumulation coming in on the volume bars. Hey, it was right there. Now, this one here, the ITOT, was a no-brainer. Now, this is the first one out of the DIA, the SPY, the Qs, the IWM. You can say what you want to say. But the ITOT was a no-brainer for me. Okay. All right. Okay. So here's the ITOT on the weekly chart. Now, this is the only thing that is a concern to me on the weekly chart with ITOT. We are definitely right at the 100-week moving average and the downtrending 8-week. Not the green moving average line is an 8-week moving average line. We're right there. Come Tuesday morning, it's going to have to do something. It's going to have to get it and go, or it's going to get rejected. If it starts pulling back, hopefully it can stay tight right around the 4-week moving average, find support, and then go. But I have to admit, it was a no-brainer. We had to take it. But we are coming up on this 100-week moving average. We right at it almost to the penny. It closed right at it almost to the penny. Can we get above that? Here's the 9-week, the 8-week moving average here, almost to the, and the 13-week is, and the 30-week is, everything is pointing down. So, hey, we got to be careful here. We got to keep our eye on it here, all right, and see what happens. Now, look at that volume bar, okay, for this week. It is above average and higher than the previous week. That's accumulation. Higher prices with higher volume than the previous week or previous day. If you're looking at the daily chart, it's higher volume, it's higher prices with higher volume than the previous day. That's accumulation. If you're looking at a weekly chart, it's higher prices with higher volume than the previous week. That's accumulation. We got accumulation. Money is coming in. Okay. So we see everything moving at BTA. Every week at BTA on BrownTradingAcademy.com, we talk about this stuff in depth with our group every Monday and Thursday, twice a week, hour a day. Get that money. Okay, look out for the next video.